there's a lot more people that we've done specialist mortgages for this year that have never, like, you're talking barristers and judges and stuff because things are a bit expensive, and they're usually quite tidy when it comes to sort of keeping up with payments. A lot of specialist lenders will ignore missed payments. So if you're thinking of raising funds or wanting a mortgage, specialist lenders will be okay with that. Whereas I think high street, is it typically no missed payments in the last sort of...
Yeah, high street tends to want you to be relatively vanilla, but lately they are starting to make a few concessions. I think I spoke to Metro Bank the other day, who were literally saying with missed mortgage payments, which is like one of the worst things that you can ever do, if you can try and avoid missing a payment on your mortgage, because that's the most credible thing. They're starting to look at that as well. So I think because of the current climate, a lot of them are starting to loosen up certain terms because more individuals are falling into that bracket.
Correct.
Because of this times. But it's something that you guys...
This is very, very common. But again, we can still help you get a mortgage or get a buy-to-let mortgage or release equity in your house if you have missed payments. And I'm sure we know people who've probably had this scenario thinking that, do you know what, I'm going to wait until next year, whatever. No, this isn't the case. You can still get a mortgage and get finance even with this kind of situation. So that's...
Do you do lending to clear debts and stuff like that?
Yeah. We've helped clients when they've been in IVAs, debt management. A lot of specialist lenders will ignore all of your adverse credit, which is over 12 months.
Okay.
Yeah, even if it is within 12 months, let's say you missed 2 payments on a credit card 6 months ago, they can still help you. Of course, lenders have, there's different, they have a hierarchy, of course. You've got your best product, and you've got the next one. They can still help you get from A to B. So, don't let that put you off. Sure.
Very much higher
than... This is. I'm going to be honest with you. So, and just so everyone sort of understands, high street, your Barclays, NatWest, lenders 10 deals with. These are the best products. Everyone should always try and go through a high street broker. People wouldn't really call me up and say, "Look, Mo, I want a specialist mortgage." People just want a mortgage.
Yeah.
Right? You know what I mean? So, our lenders, yes, they're willing to take on more risk than Barclays and NatWest. NatWest and these kind of lenders, their rates will be the best. Although right now things are expensive everywhere, but typically their rates will be the best. But their policy, their criteria is very tight. If you do not fit that bill, they won't lend you any more money. That is it, because they can't. That is how it works. With our lenders, the rates are a little bit more expensive. The fees are a little bit more, but it helps that client when no other lender has helped them. And what you can do is take a specialist mortgage or take a second charge or whatever you're looking to do, and then later on, whether it's in 2 years or 5 years, Tendai, for example, can look to remortgage you and move away from that specialist lender that you were currently with back to Barclays, because by that time, hopefully, everything's sorted, whether it was a complex income scenario or your credit file or whatever. A specialist mortgage or secured loan or whatever is always a stepping stone. Yeah? And this year, we're doing way more of that. Record-breaking numbers because things have gone really tough. Yeah. So, many income sources. So, benefit income. I think a lot of high street lenders, they will only use 50% of this, or they won't use this, they won't use this. Specialist lenders, they'll use 100% of this, 100% of that. So, you might be in a situation, for example, you want to get a house, but you're on X amount, but you also get this. You go to Tendai, for example, and she can't find you a lender that will use everything to get you that house. So she then will call me. Does that make sense? Yeah? So our lenders are okay with that. What else we got? Non-standard properties. Non-standard properties. So things like timber frame houses. Yeah, like
The concrete walls.
concrete walls. So, yeah, so it's a lot of high street lenders, they don't really have an appetite for that kind of stuff.
Opposite a pub.
Opposite a pub, yeah, next to a commercial premises, massive acres of land. Yeah, our lenders are okay with this, so don't worry about that. Need to raise money for tax bills. This time of the year, we have loads of inquiries for a lot of self-employed people wanting to clear the tax bill, because not everyone, this doesn't apply to everyone, but not everyone puts money away to pay the tax man when they come to 31st of January. And what happens is they go to someone like Tender, say, Tender, I wanna get some further borrow. I got a 50 grand tax bill to pay. But that lender, let's say it's NatWest, they're gonna say, sorry, we can't help with that kind of situation. But our lender's not a problem at all. So yeah, we can certainly help with those. Specialist lenders can actually raise funds for any legal purpose, whether you want to buy a new buy to let, anything. So whereas high street lenders are all, they're quite restricted, right, when it comes to certain loan purposes and stuff.
Yeah.
Yeah.
I mean, for instance, to settle debt and stuff like that. I remember just making an inquiry the other day on a lot of buy-to-let standard vanilla lenders. They were like, oh, actually, they would only want you to release equity to purchase another property, not to clear off other credit card debt. I was like, oh, okay. So that was quite new, and it just depends on. They can bring in those little things when they think they don't want that level of risk.
Right.
Tell me a quick question, Mo. So obviously, because these lenders are looking at higher interest rates, things have gone pot belly up. Do you advise or do you do any programs? Because what are the risks of people from there actually then losing their homes? Do you have a lot of cases of people who've taken borrowing with yourselves who end up? Because I remember years ago, I used to work for a company that would take on, when you initially borrow money from buying a TV at 0% interest, and then after that, if you don't pay it off in 6 months, it starts to charge you 30-40% interest, that. And we used to then take that loan and put a secured loan, and sometimes the payments were really a secured loan at like 19% or something like that we used to do, which was crazy, but that would put people at risk of losing their home.
Right.
Because if you're now taking a debt, putting it on your home, unsecured debt, putting it onto your home, and it's now a large amount.
Yeah.
Do you guys see a lot of that where people actually, having dealt with you,
As in, do they come to us
and then lose their properties because they've taken on too much?
So,
or do you have programs, or do you do reviews with them to try and
absolutely, yeah. So specialist mortgages is a higher risk product anyway.
Yes.
Because there's a reason they're coming to us, because they don't fit with your lenders. So we have to treat pretty much majority of cases as vulnerable.
Yeah.
So we make sure that whatever we're advising is not going to put them in a worse off position.
Okay.
Absolutely not. No. So we've helped loads of people. Even for example, I've done a remortgage 2 months ago for a client who was about to lose their house. She had an interest-only mortgage. Comes to the end of the term, the interest-only term that she was with, I can't remember who the current lender was. She had to pay back like 200 and something £1,000. If she didn't pay it, she was gonna lose her house. So yeah, we were able to get another mortgage with a specialist lender, and save that client. So whenever we help clients, it's really satisfying though, because
they're at the end of the road.
They're in a sticky situation, So it's honestly, some of the reviews, our FIFA reviews, quite emotional actually. We've saved them a lot of money, we've helped them, and it is truly emotional. Raising money over several properties, cross charges. Do high street lenders do that? Are you able to secure on several properties in one transaction or? No, no. Yeah, so if you've got several buy-to-lets, I think someone said
Investing.
yeah. So rather than having 7 applications, 7 valuations, 7 lots of fees, it can be quite expensive doing it that way. We can do what you call a cross charge, raise you X amount of money on across all 7 properties or whatever, in one transaction. So this is something that we these are, just so you know, guys, these are like the most common scenarios. There's so many unusual scenarios that non-standard scenarios we can help with. These are the most common. Raising money quickly. The good thing about our lenders, because they're taking on a level of risk that your lenders aren't, they know that the rates are a little bit higher. So they're quite flexible with things like valuations. So a lot of our lenders don't need valuations.
Okay.
Yeah. So which means,
So what do they base the value on?
they will base, so they do this thing called desktop valuations. So whatever their system believes your property's worth, they're happy to work off that, which saves the client a lot of time, a lot of money. If you're doing a mortgage, a lot of our lenders, they don't actually need solicitors. Typically, solicitors, what they charge, like £2,000-3,000 sometimes. A lot of our lenders will do it's called internal funding. So typically, we can complete a loan, a mortgage, within 3 to 4 weeks. Yeah. So that's quite something that we quite proud of. Over indebtedness, I think we look at stats a lot in our office. I think the average household debt in the UK since things have been going up in price, goods and services. I think typically now it was like £26,000 2 years ago. I think the typical household debt now, you're looking at about £30,000. A lot of people nowadays, believe it or not, they're living off their credit cards and loans. So what they're doing is they're taking out more credit cards, more loans. They're drowning in debt. So when they come to Tendai and say, Tendai, I want to clear this debt. I've got 8 credit cards, and sometimes you can't help, right? Because high street lenders will only allow a certain amount of debt to be cleared. Our lenders, you can clear 100 items of credit. It's not a problem. So we can, and obviously, when it comes to debt consolidation, we don't just look at your short-term saving. We look at what you're going to save in the long term too, making sure that you're getting the best advice. Couple of case studies, landlord with 9 properties. So there's 2 things there. Properties undervalued, and again, what the landlord was looking for wasn't fitting on the rental income. So we were able to. This is a real case, actually. We helped this landlord raise funds across 3 of his buy-to-lets, using his personal income because the rental income wasn't enough to cover the payments. We used his personal income to support affordability across 3 of his buy-to-lets, allowed him to purchase his property. All done within 24 days. It's quite a large loan, this one, actually. This is a very, very common scenario we do every day. Debt consolidation, customer with £35,000 of unsecured debt, negative disposable income each month, poor quality of life. We help them by giving them a second mortgage on their house, over 20 years, saving them £700 a month. This is just one scenario. We've seen like thousands of pounds being saved a month. That's a huge difference in your lifestyle. So things, specialist mortgages again can help you with that sort of stuff.
When I look at 8.4, there's not that much difference actually with the bottom end of your Kensingtons, and some of those rates are around 7%, so it's not too scary.
It's no. I remember we were doing this 2 years ago about 3-4%. Obviously the times have changed massively, unfortunately, but bridging finance, we're doing a lot of bridging this year because the demand for buyers has slowed down a little bit. So there's some good deals out there. So a lot of people they want to, they found a good property, which is, on sale. They can't sell their one in time. The house is on the market, for example, but they really want to get this one. So what we do is we provide them finance, what is called known as a bridging finance, get you from A to B, for them to purchase that house, and then within 12 months they will sell the house they used to own to pay off the loan that they took out. So this is a very common sort of finance that we're doing these days. I think someone mentioned auction. I know it's a bit of a nightmare sometimes, but a bridge is a great way for you to purchase properties at an auction. We can complete it within 28 days. Everything done all in house. There's a lot of people these days. They're gearing up their buy-to-lets, letting them out to the council.
Oh yeah.
Yeah. So a lot of high street lenders aren't a big fan of these kind of scenarios, and there seems to be more and more of this. Because what happens, I think the council, they have a good deal with you. They pay you thousands of pounds, and I think a lot of landlords are getting switched on now, thinking, do you know what, I can make £4,000 rent from the council rather than one tenant paying me £1,000. So if you get these kind of, if you're thinking about some, gearing up your buy-to-let, letting it out to the council, this is something we can do. We're doing so many of these. I think we've done some to land.
Oh, you mean, so earlier I was talking about when you have people who, vulnerable clients. I think in this, there are a lot of people who have children's homes. I don't know anyone in the children's home business. Yeah.
Yeah, I have tenants that are sort of supported living.
Here we go. This
So
is
they're property for supported living, but
The lenders don't like it.
yeah, Kent kind of accepts it, but some of the lenders
Yeah.
that got like Coventry were a bit iffy about it. So
Yeah.
I
A lot of
sort of
lenders-
wanted whether to put a company late or
Yeah.
to do it as an AST.
Yeah, because the end user is a vulnerable person, and you can't ever really evict someone who's got challenging behavior and stuff like that. So a lot of high street lenders don't like that. So
specialist lenders definitely have an appetite for this,
Yeah.
and I think we've had a massive meeting with a lot of lenders the other day where they've actually got teams dedicated for this kind of inquiry now, because they're seeing
it's quite
because a lot of landlords are now switching their buy-to-let sort of model, if you like, to let them out to the council, because you're going to get guaranteed rent every single month from the council in your bank. There's no messing about with the rent every month. Yeah.
okay.
Yeah.
Awesome.
Yeah. Thank you very much, guys. Thank you.